is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. You are what you believe you are. Humans are powerful magicians, and you have the power to make yourself what you are right now, but it's not your reasoning mind that controls that power. It's what you believe. Market-wise, let's take a look at it out here. We have the Dow Industrials flat, NASDAQ down 94, S&P's off 10. It's pretty wild when you take a look at these indices. So percentage-wise, of course, you get the Dow flat. NASDAQ is down 1.1%. S&P's are off 0.3%. Gold contract up $2.80, trading at $12.0190. Let's go over and take a look at the gold contract, see what we have happening inside that market. Bring up that contract, bottom line, you get to a low today, 11.96. You're at 12.01. If we do take a look at this, gold had one little sign that we had a buyer in there, and that was there it is, this morning. When we went from the 12.98 to 12.01. Bottom line, gold's going to need a lot more than a couple dollars and a lot more volume in order to get to higher price. Silver contract trading up a few pennies at $14.11. Light sweet crude. Now this gets interesting because light sweet crude failed yesterday, big time. It's down 1.5% today. This came off the high. Made it to a price point yesterday of 71.40. The high it was going after was 71.63. Came off that high. Have some volume on the way down. Bottom line, this consolidation has been out here since May 22nd. That was the last high. What I expect you're going to see now is that good old oil contract will start making its way down to the $63 area. Notes and bonds are flat. You get the 10-year up 1 tick. You get the 30-year up 1. If we go over and we take a look at this note and bond market, interesting. So what you had out here, we just rolled on the contract from the September to the December contract. What we did out here today is that you got under the lows that were established out here on the 29th of August. We did lighter volume. So right now you get a rejection of lower price. You're going against the strength that was out there from August 10th. That's still saying that notes and bonds want higher price. King dollar. What do you have with King dollar? King dollar gave it up again. Bottom line is that what I expect we're going to see here, folks, I think this is actually a big turn on King dollar. The reason I'm saying that is twofold. That King dollar has been going up for quite some time. This is the first time that we actually had King dollar doing an ABC down as well as gold doing an ABC up. Now, the ABC up on gold got negated because we came down with too much volume yesterday. The ABC down and King dollar, however, did not get negated because what had happened is that when I had that spike yesterday, that was still lighter volume than on the way down. And what happens is that now today you get the volume expanding once again. So what you have out here is that King dollar is going to go after about approximately the 93,500 mark. That's going to basically keep it inside the range. Anything inside 95,220 is inside the lower range. Right now we're at 95,125. And if we do look at this intraday, what you're going to see is that you get the volume at the bottom of the bar. You're building some cars here. I expect more than likely tomorrow we're going to see good old King Dollar at lower price. You get a lot of movers out here. You know, we get some big numbers when you take a look at the, well, here, let's do the NDX first. So I'll get into the NDX and the movers inside the NDX, because the NDX is the one that's getting hit. You get JD.com down 10.9% or 321. Workday's down 7.7% or $12. You get Netflix down 5.5% or $20. Mercado Libre is down 4.8% or $16.87. Let me go to Netflix just for a second. So Netflix, yeah, you get volume behind the move too. So this is a classic. Netflix came off its high of 423 2 months ago, gets down to a low of 310. Talk about $120 down, 20% down, like a heartbeat. Does a counter trend bounce to 376, which is ice, which is the last time it had any volume. Coming off there again, Netflix looks like it wants to go to 271. Amazon, if we were to take a look at Amazon, Amazon came off its highs. We're down 48 bucks. That is trading, yeah, and you get an expansion of volume. So bottom line, you made a high yesterday with 5.7 million. You have 6.5 on the way down. Amazon, as, let me just look this up because Tommy and I were talking about this morning, actually. So Amazon, as well as Apple, and Apple's pulling off the highs a little, 1.6, is, that makes up 8% of the S&P 500. Pretty intense, folks. So where Amazon and Apple are going to be a big deal. Inside the, let's go back over to that NDX, giving you the strength. We gave you the weakness. Strength inside the NDX is Express Scripts. That's up 3.7% or 320. You get Dollar Tree up 3.3 or 268. Now that's a dead cat bounce. Henry Schein is up 3.3 at 260, and you get JB Hunt up 2.35. That's $2.82. Let's look at JB Hunt here for a second. So the low for the year in JB Hunt is 98. The high is 131. Okay, so let me bring this back again. Yeah, man, you can see, looking at this, man, you can see that the economy is cooking. So we go back 3 years. JB Hunt 3 years ago, 63 bucks. It's doubled in price. You know, bottom line is that this is at high, it's a high-end consolidation, and it looks like it wants to stay up here inside this consolidation. The bottom of the consolidation is about 116. That being said, at 129, guess what? You get volume up there. So there's some real action inside the trucking business, which would make sense. The oil business. Let's go over to the XLE. We take a look at the XLE. XLE traded down to 73.19. We are at 74.10, and we'll see how this shakes out, because what the XLE would have to get above 73.92, and that's what it's doing. It's going to be interesting to see how this shakes out, because what you do have so far inside that XLE is that you're getting a rejection of lower price, and you will have lighter volume than yesterday. That's if you want to see someone doubling down, this is pretty intense. Rig, folks, which has been a disaster, and this is this is Transocean. Bottom line, Transocean is buying another company. They're buying Ocean Rig for $2.7 billion to add ships, and guess what? They're buying the things that people aren't using here, meaning deep water wells. Coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we have, let's see. You get Micron Tech off $2.50. Facebook's down $4. You get Telray. Oh, look at this. This, we got to get over that. This is just amazing, folks. These are going to be like blow-off highs. This is about as intense as you can get. So, Telray. Telray is a cannabis company, up $15. That's, yeah, basically 15%. Trading $92.70. And, oh, no wonder why. This is intense. So check this out. There's a, I didn't see this morning. There's a 17.2% short position also in this equity. This is an equity that went public on the 18th of July at $17. You could buy it at 20 though all day long. It was just laying there at 20. It has a market cap right now of 8.6 billion, billion with the B, but yet it only takes in 9.7 million. Okay, pretty intense, folks. If we go over to, we look at Canopy, you're going to see Canopy's on fire also. So what happened, I'll show you these stocks intraday out here too, folks, okay? Let's see, CAN. I'm going to stop bringing Canopy in. There we go. Okay, so in the U.S., it's under the symbol CGC, Canopy Growth Corporation. That's trading $52.36. Now, watch the volatility that is out here on this today, okay? The low for the year is $7.22. The high is $56.59. That's today. So what this is about, first it opened high, all-time high, dove down, at 10 o'clock, and then guess what? There's a big conference in Boston right now. And in Boston, you had the, let's see, you had the CEO of Constellation Brands, okay, speaking. And so here we go. So Constellation Brands just added fuel to the fire, pushing marijuana stocks to extend their gains on Wednesday. This is the CEO's quote, folks. Let's go through this. Okay. Oh, actually, it's not the CEO. It's the Constellation Brands. Oh, yeah. No, Chief Operating Officer. That's what it was. Bill Newlands. We think this is going to be a big business worldwide. Newlands said at the Barclays Consumer Staples Conference in Boston. This is not limited to Canada. This will undoubtedly be a market that develops in the United States. It's developing around the world now in places like Germany, Austria, Australia, and other markets. The comments sent cannabis stocks higher after a strong start to the session gave way to mixed trading. Canopy growth, you know, you talk about an investment, folks. So check this out. We'll go through this. Canopy Brands made a $3.8 billion investment last month. So check it out. $3.8 billion last month, right? When we look at the stock's already doubled. So it's hard to comprehend that you make a $3.8 billion investment, you make an additional $3.8 billion, actually, yeah, probably just about the same deal, and you've done that in the course of literally 3 weeks. Yeah, 3 weeks. No wonder why they're happy. And there's no doubt. Listen, it's going to be a monster business. I would. Absolutely, CG, Canopy Growth, CGC. I would definitely, you know, I wouldn't be biting here. That's the bottom line. You know, this thing laid out here for so long too. It really did. There was the consolidation that took place. It was consolidating from January at $35 down to $19. It started in January, then it took off like a rocket ship. Now, what should normally happen with something like this is that you took off like a rocket ship. There were ABC structures on the way up, no doubt about that. In fact, let me see this. This was, I think we did this yesterday. Yeah, I did. Okay, so here's the ABC up. This is cool. So you get the 8 point is 480. That's approximately $32. 42, 52. Oh man, holy cow! No, it's going to go higher than that. Okay, let me do this. I got to. So your 8 point is 489. I'm going to call it $5. The real question is, it's still $30. Yeah, that gets you 46. So it's finished one ABC structure on the way up. Now this can extend itself for sure, but bottom line, to get the gist of it, just hang on for a bit. They will get a pullback, folks. You know, bottom line, it doesn't look like they're going to just yet, though, because of the short positions too. In fact, you had Cronus come out, and I'm surprised there's only a 10% short position on that versus a 17% short position in Telray. So, because what you did have is that you had Citron come out and put a paper out, and Cronus, that's when Cronus went from a price point of $12.89, and it went down to $8.54. It just shook it off, and bottom line, you're over the highs now once again. And you're not only over the highs here, you're over the highs with volume. You know, so this baby looks like it does want to go higher, but bottom line, it's going to be a wait. And yeah, you got Rocky Mountain highs, you got worldwide highs. The bottom line is that what we're going to see out there is that you're going to see an aspect that you had the CEO of Canopy come out this morning also saying that he thinks that the medical part of it is going to be much larger than the recreational part. And we'll find out. Facebook and Twitter up at Capitol Hill right now. Facebook's moving lower. My take is Facebook wants to run down to 149. That's the high volume low swinging out here at the 29th of March. If we go take a look at Twitter, same type of setup. Twitter down $1.99. The differential in Twitter, by the way, is that Twitter is coming down with big volume today. You know, Twitter has a high volume low laying out here at 3107. If we do put this on a monthly basis, you know, you can make the case that Twitter actually didn't break its swing high the last time we were up there. It would have to get to $53, and we only made it up to $47.49. It did have some juice there, but now you're backing down, and you are backing down at lighter volume. But this is going to take quite a bit to get up into higher highs. Because you remember, Twitter, as soon as it started trading, the next following month was trading at $74, and it crashes down to $13.72. That was the low established May of 2016. The high was established December of 2013. 13? Yeah, 13. Fairly new. That's the bottom line. Google. Yeah, Google didn't show up. They didn't want to talk with their lawyer. Google trading, I traded it down to 1162. You're at 1182 right now. You do have an expansion of volume. Put this on a weekly. And let's see. Oh, listen, Google's inside the lower range, man. This is serious business for the NDX 100. Yeah. Just get back inside the lower range. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Dow Industrials are flat. NASDAQ is down 96. S&Ps are off 9.5. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Dow right now flat. NASDAQ is down 95. S&P is off 9.5. We get over, we take a look at Tesla. Tesla, bottom line, folks, continues lower. It's going after the lower end of its consolidation. You're down $7.82 out here today. When Musk was saying that, okay, he's going public at 420, the stock shot up from 339 to 387 on the 7th of August, and since that point, guess what? You're just going south. Tesla does have this high volume low laying out at 244. And when you put this on a monthly, you're going to see that this baby, well, here, I'll put it on a weekly, actually. It sticks out on both of them, but I'll put this in closer. So you're going to see, yeah, we're right next to it, too. You get, so the week of April 6th, 244.50. This thing is like El Primo sitting there. And now what's going to be really pretty wild is that you break that, and then you're really going to be in trouble, because what you have is this, this is where Tesla had broken out of a, nice base. Tesla had based from February of 2014 over to March of 2017. So it had a 3-year base going back and forth. The top of that was 291. The bottom was approximately 180. So it was basically $100 back and forth. Once it went topside, we've been up at these levels since March of 2017. So you get about a year and a half you've been up here. Well, you're making your way back inside. You make your way back inside here, and then you have trouble in paradise. Because then it sets up a 181. That'd be pretty intense, man. Now, that being said, this is going to be the cool thing about Tesla, is that what you do have out here is that when we did go back up topside last month, you have a high volume spike at 387. So I don't think Tesla's done. This is going to be crazy. My take is that, yeah, we're going down the other end. We'll see whether it holds at 244. But something's going to come out of the woodwork. It looks to me like once we get down there that, yeah, it can go topside again. And in Tesla's case, things are not looking great, because what you do have is that they have right now the $1.8 billion in junk bonds. And let's see, the lowest price since they were issued last year after Mercedes unveiled the new electric car, and Goldman Sachs said the company might struggle to be cash flow positive. So what you have is this, is that imagine if you're a bond investor, you're buying bonds at, of course, par, which is $100, right? Right now, that $1.8 billion is worth 85 cents on the dollar. That's where they're trading out at. So 15% down, that's a good number. That's a big number. There's no doubt about that. Some of the other higher volume equities out here today. Let's see. You get, I want to get to Transocean for a second. I started on Transocean. So check this out, folks. This is pretty amazing. So RIG, which is Transocean, and you see this happen with public companies, and it's like, man, this is kind of what Sears did. Sears, bottom line is that Sears was in trouble when Eddie Lampert bought it, and then all of a sudden Sears turns around and buys Kmart. Sears turns around and buys, what was the other discounter? I mean, he bought every discounter that was like going out of business. So Transocean, their specialty is offshore drilling miles down, 2-3 miles down. That's how they make their money on the amount of rigs, okay? Now, if we take a look at their revenue, what you're going to see is that they went from $9.2 billion in 2014 to $2.9 billion this year, right? You can see, guess what, folks? You don't need offshore rigs that go down 2 miles because we have so much fracking. And just to wrap that around for a second, they were doing almost as much in 90 days as they are doing all year now. 2.3 billion they were doing in 90 days, and now they're doing 2.9 billion. So what do? And here, well, I'll show you the stock price, okay? So when you take a look at this, then we'll go back, we take a look at the stock price, you're gonna see it was a one-way route down from $163. $163 in 2009, you're trading out $11.22. So what do? They just spent $2 billion to buy Ocean Rig to add more capacity, okay, for drilling down a couple miles. Transocean agreed to buy Ocean Rig, UDW in a cash and stock transaction valued at $2 billion, including debt, to expand the company's ultra-deep water drilling fleet. The Transocean values Ocean Rig at $32.28. Let me bring Ocean Rig up. This is going to be cool because these Ocean Rig shareholders are the ones that scored here, getting bailed out by... So if we look at Ocean Rig, you're going to see that this company's trading at $30. We look at their revenues. Oh, look at this. Same deal. Their revenues have gone from $1.8 billion in 2014, now $441 million. And in fact, the way this is shaken out, listen to this. This is pretty sick. Last quarter was $194 million. Next quarter, $112. Guess what? After that, they must have contracts dropping off to get down to $65 million. They're doing business in Angola, Brazil, Congo, Norway. Their business is contracting by 17% over a 3-year period. And if we bring this back, oh my God. Yeah, this is an equity that went from 100. Holy cow. Wow, this is really, so check this out. This is really, whatever is going on with this stock. This stock went from 100, this must have had so many splits, $193,000 to $30. There's something wrong here. Yeah, I suspect this went through maximum amount of splits, and who knows. Bottom line, the point is that you do see these companies that are going downtown, and they're desperate, and they find another company that's desperate, and they're hoping that there's just some kind of turn in the market and they can make it. You know, when I see that, though, that just tells me that deep water drilling, guess what? It's not going to be turning. The amount of shale that we have out here is absolutely huge. You can picture that these equities are going down like that when the price of oil has stabilized and has stabilized for quite some time. If we take a look at just oil in general, you pull that back the last 5 years, what you're going to see on a continuous contract is the high 5 years ago is 95. The low 2.5 years ago was 26. Oh, that's a problem. I see that. Okay. So now you're back up at 75. Yeah. That's quite a ride in 5 years. Wild. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Dow is flat. Nasdaq's down 94. S&P's up 9.5. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Bitcoin XBT. So good old Bitcoin, the volatility has been back in good old Bitcoin for sure. We take a look at this a couple weeks ago. Bitcoin was down at the lows at 58.80. Gets up to a high yesterday of 7,400. Today it gives up $440. And what you have out here is a couple different stories. You get, I believe Goldman is out there saying that they're going to have less people. Yeah, there you go. So a fresh sign that financial industry's love affair with the cryptocurrencies is cooling. Ether sank as much as 15%. Bitcoin fell 7%. Amid a report, Goldman Sachs is pulling back on near-term plans to set up a crypto trading desk. That's the first part. Then you have that was one story that was out there. And then it's a dark day for crypto when one of the best-known exchanges offering peer-to-peer trading more in line with the original version of Bitcoin. Then centralized exchanges will start asking users for personal information. Oh, this is interesting. Okay, so let's see what this is saying. Eric Voyers, Chief Executive Officer of cryptocurrency exchange Shapeshift, said in a blog post on Tuesday that the platform is launching a membership program which requires basic personal information to be collected and will become mandatory soon. It seems like an about-face for a platform which Voyers said was known as the exchange without accounts. Shapeshift is making Shapeshift. I see. Shapeshift. Shapeshift. That's a good one. Okay, so that's the name of the exchange. Shapeshift. So I can see that you're changing shapes in currencies. Is making a move after users requested account-related features such as email notifications and exploring the ability to tokenize loyalty programs. Bottom line is that good old Bitcoin, you know, you get some downward pressure on it. We'll see how that shakes out coming into the lows. We go take a look at the euro. Euro out here right now, trading up 48 ticks. We're at 116 euro dollars to $1 US. Now, what you have here, the top of this range happens to be 118. We'll see how we get into that, because if you make it, if we do make it by 118 in the euro, then you're talking action, folks. Then you're talking some big action, meaning because when the euro went downtown, it went straight down from 124 in April into this 115. Of course, that correlation goes right along with the good old dollar index, if in fact we have a turn inside the dollar. My larger take goes on the market in general. Here, let's go over to Asia for a second, because I want to show you something that happened in Asia last night. And I'm really psyched, actually, that this isn't all over the news today. So Asia last night, folks, had a tough night. Asia was down from 0.5% the Nikkei. It's no big deal. Hang Seng, though, is down 2.6%. Now, if we take a look at the Hang Seng, what you're going to see is this. You're at 27,000 243. You're down from 31,500. Okay, so, you know, you're down, what, 5,000 points. That being said, though, you're coming into lows with volume. That's telling me that we have lower prices coming at us. And we pull this back. What you're going to see, you get a major breakdown. I mean, this thing, there's not much hanging. Whoops. Okay, I got too much junk on that right now. We'll do this again. Okay, so now I got it cleaned up. So what you're going to see is this, is that it took a long period of time for the Hang Seng #1 to take out its 2007 highs. It did it in January of this year. Bottom line, you got back inside the range. Once you get back inside the range, now the question is going to be, okay, where are you going? Well, just inside the range, this is saying we're going to 24,000, approximately 500 now. It's another 3,000 bucks down. That's going to be some big numbers. If we get back inside that number, get out of the way, man, because then you are talking some serious business. And I want to go to Shanghai. So that was the Hang Seng. So, of course, you got to remember that the Hang Seng has many of the A shares trading inside the marketplace. If we take a look at Shanghai, this is a real mess. This is worse of a mess. This baby here, #1, never made it to its 2007 highs. 2007 highs was 6,100. The bounce that was generated in got 2015 got to 5,100. You're 27. We're going right now after the 2,600, you know, which is the last swing low. And you break that, guess what? That means you're down, not at the 2008 lows, but you're getting, you'll be down at 2,000, where the 2008 lows is 1,600, and that's off a indice that was trading at 6,000. So you can see those equities are affecting our marketplace, and I expect what you're going to see is that it's going to affect it more, because when you take a look at the worldwide markets, this is what you get. The dollar strength has put a hurting on a lot of countries. That's not where you get the real destruction. Where you get the destruction is that who has lent money to those countries, banks, who has invested in those companies, large funds. As it goes from country to country, that is where you get the squeeze and there's no liquidity. And as soon as you get no liquidity, folks, you get problems in paradise. And I can show you that just from the China last night, if you get the daily newsletter, you know, I was talking about this in the newsletter this morning, that the largest mover on the way down happens to be a Chinese stock. It's JD.com. Now, they get problems in of themselves because he's got a public relations disaster, and he might be in real trouble because he was in Minneapolis. They basically arrested him, let him go. Bottom line, we'll see how this shakes out. But JD.com is down from $45 2 months ago. It's trading at it's $26 now. And you're going to see that we're in one world because there's plenty of equities in our S&P 500, in our indices that are from China. And you got to keep your eye on those big China exchanges. That's the bottom line. And they were whacking those last night, and they were getting out of those as fast as they could. Dow Industrials is impressive out here today. Dow yesterday, what the Dow did, the Dow rejected lower price yesterday. Did have lighter volume. That's what this bounce is all about today. Now, what's going to get intriguing out here on the Dow today, if the Dow does not get the volume that it had yesterday, let's see. So we came down. Now you're going against 800. If we have a contraction of volume today from what we had done on Friday, because we're going to have a failure on price, then the Dow once again is going to try to get into lower price. You know, out here today, the strength versus the weakness inside the Dow is that point-wise, you have 3M putting 19 positive points, Caterpillar 15, Johnson & Johnson 13, Big Mac 9. Taken away from it, Visa negative 34, Microsoft negative 22, Apple negative 13. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 7. NASDAQ is up 105. S&P's down 11. If we go to the composite first, we take a look at that composite. Composite right now, you're down $105. Now, and the composite, folks, got way away from its breakout area. You know, that being said, guess what? You know, the baby in 1 day has just taken back 7 days of trading. You'd still have to basically come down about another 50 points to get back inside the lower range. 79.23 is approximately that number. So you get another $50. But if that's what you get, bottom line, then you're going to see a real correction on your hands. That's the way this seems to be shaken out. We go over to Amazon. We take a look at Amazon. Amazon is going to have volume off the high. You've done 8.2 million. And bottom line is that, you know, when you have volume off a high, that is saying that you get some people moving out of the equity, and Amazon hasn't had a correction since $1,300. So that is, it's normal to have corrections in markets, period. This equity went up $700 without a correction, or in fact 50% without a correction. So a normal correction, and Amazon, watch this. This gets scary, actually. So if I did this for 3 years, let me see what 5 years looks like. Oh, my God. It almost looks like, no, you can't go 5 years. But you had a straight line move for sure from 950. So if I just take it from, let's just say if I take it from 950 to 2,000, and 950. That's two. It's amazing. My God, it's amazing how fast this actually went up. Yeah, because when I go 950, I'm only going a year. 1 year. That's amazing. So it's a double in a year. So a normal retracement would take you down to 1627. That's only a 0.382 retracement. You can go 50% retracement, and that's a normal move in a bull market, still going up. Stay right there, folks. Going to be coming back with some numbers after the close. Dow Industrials right now down, no, up 14.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Kicking into September. You gotta love it. Accept others the way they are. You cannot change other people. To try to change them to fit what you want them to be is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We had the Dow Industrials up 22, NASDAQ down 96, S&P's off 10. Big divergence out here, folks. If we go over and take a look at the Dow Industrials first, what you're going to see is this. Dow Industrials yesterday had rejected lower price. Bottom line, that's what this is all about today. You get a bounce out here. If we take a look at the volume characteristic, now it held price. Volume out here, 836 million. So that sets up that the Dow Industrials did have an expansion of volume. That is set up that the Dow Industrials does want to go after the highs that were generated out here last week at the 26,167. Now, that being said, bottom line is that is not the high. The high in the Dow Industrials is the 26,616. So that's approximately 450 bucks over where we are trading right now. NASDAQ, different animal. If we go take a look at the NASDAQ, what you have with the NASDAQ is this. The composite, that baby went south. You had volume out here of 2 point, oh yeah, big number. Okay, so you get confirmation out here that we want lower price. Volume of 2.5 billion versus 2.2. We take a look at the composite. What you have with the composite, that came down hard. You're down 96 bucks. You are not in the lower range yet. The lower range in the composite starts at the 79.23 number. Right now, we're at 79.95. If we do look at the NDX 100, we take a look at the NDX, you'll see the expansion of volume out there, down $2.40, 41 million shares traded. That's after reaching a high with 29 million shares last week. For the composite, for the NDX 100, to get back in the lower range, it needs to be down about another $1. Right now, you're down $2.40. Inside the NDX 100, the strength versus the weakness out here, you had JD.com down 10.5%. You had Workday down 9.25%. Netflix was off 6%. Micron Tech was off 4.6%. So you had big numbers inside that NDX. There was a lot of selling inside that NDX. A lot of the stocks that you are familiar with, you had Facebook and Twitter up at the Capitol. Facebook was down to $3.95, expansion of volume. Twitter traded down to $2.11. That also had an expansion of volume. That had a very large expansion of volume. Twitter had 35 million shares traded. That's going after a high volume swing low. Notes and bonds, bottom line, continue to want higher price. This is going to be wild watching this shake out the next couple of days. So what we have is this. If we take a look at the 10-year note, what you're going to see, flat market out here today. It rejected lower price. It got down to 119.26. It said, see ya, don't want to be ya, at that level. Got back inside the range again, meaning closing out at the 119.31. Anything inside 119.30 is saying it wants higher price once again. And if we take a look at this 10-year yield, we're at 2.899. So the lows for the last 3 months is 2.8. The high is 3. That's the last 3 months. If we take a look at this for the year, what you're going to see is that the low is 2%, the high is 3.1 on a six-month basis. I think it's 3.11. Yeah, it is. The low is 2.7. The high is 3.11. King dollar gave it up. Bottom line is that I expect what you're going to see out here. King dollar is going to want to continue lower. You have the sellers that are in King dollar out here today. We came down with 24,000 contracts. You get a confirmed ABC structure on the way down. And we'll see if we get follow through. You know, this is the first time that King dollar has done an ABC structure on the way down in years, folks, because you got to remember something, that King dollar was, you know, bottom line, made that low at 88, came off that low, didn't necessarily do ABC structures on the way up, was strong on the way up. But this is the first time that we had something like that. And of course, what that is that it very well could be a change of trend. We'll find out if that's what the case is. Some of the higher volume equities out here today, you had quite a few of them. The selling inside the S&P as well as the NDX 100 was substantial. GE was down 11 cents. You had Micron Tech, that was down 2.32. Apple was off $1.40. Microsoft was down 3.22. So Microsoft itself, that is a large weighting structure, because you got to remember something, that the NDX 100 is a modified weighting structure. So what you have here is that Microsoft came off the highs also with volume, a big volume. This is interesting. So Microsoft had hit a high last week with 23 million. You're down with 32. That's a big number. That's a big number. There was selling out here today. Some of the other higher volume equities out here, we had Telray, the pot stocks, they went to the moon out here. Telray was up $12.85, trading $89. That is a monster short squeeze also. Telray has, I believe, a 17% short position in it. That equity had gone public July 18th at $17. You could have bought it all day long at $20, and it's $89. Don't buy that thing right now. I'm telling you, man. It's numbers-wise, don't make any sense whatsoever. Bottom line, it is what it is. You had Sirius Satellite was down 15 cents. Square was down $4, trading at $87. We take a look at some of the Dow stocks out here. This is what you have inside the Dow Industrials. We had Honeywell was up $2.15. You had Johnson & Johnson up $2.14. Big Mac was up $1.57. 3M was up $3.23. Now, just look at this. Those are big numbers, folks. And the thing that's intriguing is that the Dow was only up 20 points, because this is what you did have inside the Dow: strength versus the weakness. Your strength out here, which did overtake the weakness, was 3M, Caterpillar, Johnson & Johnson, and Big Mac. That being said, taken away from it on the way down, you get big names out here. Visa put 34 negative points, Microsoft 21, Apple 10, American Express 9. If you go over to American Express, you're going to be, tonight, what's going to happen? You had the AXP, I believe it was the FBI is coming on the American Express. Is the FBI? Yeah, the FBI. The FBI is coming on American Express to probe the Forex pricing. These banks, man, they just don't stop. Part of the overhead. Stay right there, folks. We're going to be coming back with our man, Mr. Jim Prince. The recap, we had the Dow Industrials up 22, NASDAQ down 96, S&P's off 10. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials finished down 22. You had the NASDAQ. Dow finished up 22. NASDAQ was down 96. S&P's off 9.5. Let's go over to our man, Mr. Jim Prince, as we do each and every Wednesday at 20 past the second hour. Jim's website, folks, is Greatest Business on Earth, gbemembers.com. Our man, Mr. Jim Prince, he bisects and dissects this market each and every day. And I don't Wednesday. And in Boston, it's Prince Spaghetti Day, Jim.
Oh, yes. I did not know that. That's a fantastic holiday.
Listen to this. You got to know this. This is so cool. It's amazing. So there's a pasta place that this is, I'm going back years now, right? Prince Spaghetti. This is, when you Google this, you're just going to crack up, man.
Okay.
Prince Spaghetti ended up being bought out by one of the big conglomerates, and Prince Spaghetti's still out there. This was one of the most successful ad campaigns, having everyone eat Prince Spaghetti on a Wednesday. And this is what it was. So check this out. There was this little kid running around the North End, right? His name was Anthony. And the mother is in, you know, in Boston, these are all brick buildings in the North End, and the mother's out there yelling, Anthony, Anthony! And he's coming, I'm coming, Mom. He's running, it's Prince Spaghetti Day. I swear to God, everyone ate Prince Spaghetti, man. And now this gets better. I met Anthony, a guy that worked for me. They went to Harvard College together, and I met him. Great guy. And it was just so crazy, man. But I didn't put it together. Al says to me, my producer, he says, hey, man, look at Jim Prince is on. It's Prince Spaghetti Day.
Oh, thanks, Al.
There it is. Is that your son? He's gonna be. You're gonna get him on Prince Spaghetti. I'm telling you, man. Anthony, perfect. I love it. That is awesome, man.
That's classic.
Isn't it?
That's great stuff.
I'll tell you, man. So, let's look at some charts here. You sent some charts over. Where do you want to start?
Yeah, I sent a couple of commodities over.
Yep.
Let's take a look at the cash chart of coffee.
Okay. Let's see. Where am I? 1 second. Nice, I got my glasses on. What did I just do? Okay, perfect. I got it. Okay. Cash chart. Okay, great.
Yeah, so the line we want to pay attention to here is the blue line, and that's kind of giving us the average price for the last 10 years of the cash market. It's just the historical tendency. And you see there in the lower right corner that from 9 to 12, that's September to December, the market really tends to kind of fall here for the next couple of months and then bottom out. And then from that point, after the first of the year, is when it starts to rally, typically based on this chart. So we'll keep that in mind. And now let's move over to the December coffee chart.
Okay. You know, it's so interesting too, man. It's like the way that these currencies are trading. I almost feel like going down South America and buying a coffee plantation. You can probably get one for pretty good money right now. I mean, do you know what I mean? Because the pesos got, you know, basically hurt in a big way in Argentina. Do you know what I mean? So
yeah.
Okay, so I have this one up.
Okay, so you'll note here that yesterday we came down, we touched the lower edge of that green range that I have drawn there.
Yeah.
And that is actually the one-year low for this chart. And then today we're up over 2%. So what I'm looking for here kind of going forward is for the market to kind of base in through here. It might push a little bit lower, but then start to build some sort of bottoming pattern going forward. So we could possibly take advantage of the anticipation of the seasonal tendency here moving forward in this market. It's been, as you can see here, this has been an extended downtrend. So looking for some sort of basing action to take place.
Yeah, I got this up right now. At the beginning, I didn't. Wow, that's pretty intense, man. So we went from, looks like what, $1.30 a pound is down to well, $1. Is this per pound?
Yeah.
Is that what we're looking at?
So we're up 159 back in August of last year.
Wow,
it's really taken a move down for sure.
Quite a setup, man. So
yeah, so this is just something to keep an eye on here for folks going forward here over the next couple of months. If they're interested in trading coffee, we may be presented with a setup, and I'll bring it back as we progress here.
Sure. The Euro USD, you want to take a look at that?
You bet.
Okay. Okay, so look at this baby. Oh, this is good. What a battle this is, right?
Yeah, you know, it was in that range, and, you know, into August, broke out of the range to the downside, put in that low. That is a 12-month low there as well. And now it's formed what, you know, a lot of traders will call a 1, 2, 3 pattern, a W pattern.
Yeah.
Partially, I don't have that completely outlined here, but I have the 1, 2, 3. And so today I'm looking at this, and I see the market held that support from yesterday, came down and tested it, and I show a lot of energy to the upside based on my indicators there at the bottom, a couple of panels.
Okay.
Energy to the upside. So we may see the market try to push up to that upper gold line and then into that red zone here, kind of going forward here, because I still show a lot of strength here in this market.
Yeah, you know what's so intriguing about that space that we're looking at right now too, folks, is that if it can break the top of that range where he has the red line, there's not much resistance above it. So the real question is going to be like, the bulls and bears are going to be fighting like crazy over that line, aren't they?
Yes, they are.
Yeah.
Yes, they are, for sure.
And let's see. So next we have cotton. Oh, I like it. Real cotton. Okay, real cotton's where it's at, man. It's hard to buy anything that's real cotton anymore. It is.
That's very true. That's that old commercial, right? See, I'm kind of dating myself too. I kind of know that commercial.
That's funny, man. I love cotton, though. I'm not kidding. The aspect, the difference, you know, you're in Oregon, but in Florida, for clothes that breathe, it really works. You know what I mean? Versus, you know, we have a lot of cool clothes out, but cotton is where it's at. Okay, so what are we looking at here?
Yeah, so you'll see the blue rectangles that I've drawn on the chart. The upper one, on the left there, I'm marking off that move that it made from the highs upper left corner down to the lower right corner.
Okay.
And basically it's a measured move. I've projected that off of the most recent high with the second box. So I'm anticipating that cotton continue to move lower here going forward here. And we do have a lot of support right below. We have the 200 period simple moving average, that purple line.
Okay.
Right there kind of coincides with my horizontal gold line. So those are going to be tough areas to crack here for this market, but we could easily see that this came off those highs back in June and, you know, really fell off the table, pulled back almost 50%. I think it was real close to being on the nose there, and then has since moved back down. And it's almost formed overall kind of a bear flag pattern as well. So still looking for cotton to push a little bit lower here.
Wow. You know, if we just look at this, I want to look at this coffee one again, because this is pretty dramatic, man. You know what's so crazy about the coffee one in general is that it seems that there's so many coffee places, you know, but bottom line is that they're growing a lot more coffee than we're buying, I guess, right?
Well, yeah, you know, the one thing I don't understand, Tom, is how is it that, you know, with prices falling here in the futures market, it doesn't reflect it at the cotton stand? No, not at all. You know what? Oh, that's a great point, man. And that's why there's so many more coffee places opening up. You know, that would make sense, folks. So we're looking at this chart that, you know, I sent over, and sure enough, it's $1.59, trading $1.03 right now. It looks like it. Did it pierce? It looks like it pierced the 98 cents. Yeah, 98 cents yesterday, right? Yep. Amazing. Yep.
Listen, folks, every Wednesday right here, you can come visit Jim. Go visit Jim over his website, gbemembers.com. Check it out. Jim, it's always a pleasure. I heard your son.
See you next time.
Prince Spaghetti. I'm going to find you some. Send it to you, man. Have a great one. Thanks. Bye-bye.
Are you in the market or real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow up 22, NASDAQ was down 96, S&P's off 9. Let's go over, take a look at the small caps, the IWM. IWM out here rejected lower price. We got to 170.36. Closed at 170, 179. And bottom line is that, you know, we get divergence here big, too. Because what you're going to see here, it looks like the small caps also wants to go after the high, once again, of the high of last week, which is 173.39. The S&P seems to be the culprit that does want lower price. And we'll see, well, not just the S&P. The S&P wants lower price. That came down today, had a big expansion of price. It was subtle, but the bottom line is that you did 71 million shares. You know, so you get people moving out of them. You did 61 million at the high, and it is the NDX 100. You know, in general, folks, the NDX 100 can bring the market up, bring the market down, bring the indices up, bring the indices down. It's one of the leaders, has been for years out there. You know, leadership changes somewhat, but if you did an overall picture of the NDX going back 35 years, bottom line, that's what you're going to get, which is pretty wild. I believe that, you know, whether it's the internet bubble, whether it's the technology stocks, that's the bottom line. The chips, if we take a look at the chips inside the NDX, those also the ones that bring it up and bring it down. The chips are still at highs. You know, the high in the SMHs is 114. You're at 109. Now, that being said, the chip market is at the same place that we were November of last year. So the chips haven't actually moved, whereas individually they have, but when you look at them as a whole, they haven't. You know, NVIDIA is still at the highs, you know, big time. You know, but there's a lot more chip stocks than NVIDIA. In fact, we go to Intel, what you're going to see, we take a look at Intel, you know, Intel is off its high. The high of Intel was traded at 57 bucks. You're at 47 right now. What Intel has done is that it got back inside its lower range, you know, and it looks like it wants to settle out here. That's kind of how Intel's shaking out. You know, this area, $47 is not a bad area. That it looks like it wants to be in for a bit. If we go over and we take a look at the GDX, we take a look at some of these gold stocks. Still haven't caught a bid out here. What the GDX, HUI, XAU are going to have to do right now is get back inside its range. Now, the cool thing is that on the GDX's part, you basically, we broke the $18.15. Now, the break is going to be in dramatically lighter volume. The real question is going to be, can it get back inside the range? And this is not even a higher range. This is just basically saying, can you get back inside the range? Because the Yeah, it actually has to get back inside $18.58. Because what we did is this. We broke, the GDX was in a consolidation. This consolidation has been in place since November of 2016, so almost 2 years. The bottom of that consolidation had been $18.58. The volume characteristic is 540 million on a weekly. We broke it with 417. So you had lighter volume, but bottom line, you broke it. That being said, what we're going to see out here this week is going to get kind of interesting, because if, in fact, we can catch a bid the next 2 days and get back inside that, what you will get is that you'll have a rejection of lower price. You'll have it on lighter volume. Bottom line, you're back inside the range. XAU, we take a look at the XAU. XAU also broke down. We take a look at this. We're at $63. This thing's got to get to 71. So this has a lot more work to do. The first place it has to get is 64.24. That gets you back inside 3 weeks ago. But the bigger issue is the 71.63. The Gold Bugs Index. We take a look at the Gold Bugs Index. Gold Bugs Index out here is trading 136. And that baby has to get back inside 160. That's a big number. The Gold Bugs Index can move like that, though. That's how the Gold Bugs Index actually likes to move. Bottom line, though, that's a long period of time. What you have is this, is that at 138, that's your first number to get back inside, 138.96. Then you get the big one of 160. If we do take a look at Harmony, we were talking about Harmony yesterday. This is, this stock is taking a beating, but what you are going to see here is that the good old Harmony raised its head, and you get an ABC up. Bottom line, you get an ABC up. Your A point on this is $1.43. Your B is 175. So you're talking about basically 30 cents. Your C is 162, which gets you in 192. It took out the B point today, took it out in volume. And what that's going to be all about is this, is that ZAR. So we were talking about this yesterday. If you go take a look at the Rand dollar is at 15.42 Rand dollars to $1 US. Now, it's never great, never good at all when your country's currency is basically weak. And that's what we're talking here. When you look at the Rand dollar in March of this year was 11 Rand dollars to $1 US. Now it's 15.42. What that does do, however, for gold companies in particular, is this. Or any commodity, well, gold in particular, the reason being is that all the South African companies trade in cash, gold for cash, US dollars. Then what they have to do is that they have to get rid of the cash and put it back into Rand dollars. It's part of the, laws in South Africa. They get time to do that. That being said, their employees get paid in Rand dollars. So what you're going to see here is you get 33,000 employees. You can see whatever the wage is. They have unions there. So whatever the prevailing wage is, bottom line, you're going to pay them in Rand dollars. But guess what? When your currency is imploding and you get paid in US dollars, that's the differential. A lot of the other countries that the currencies are going down, they're not getting paid in US cash. So that is one reason that I suspect that you see that going topside. API, let's see what the API come out with out here. So crude oil had a draw of 1.17 million barrels. Let me see. Let me see if I can get the whole. I will get the whole report. It just come out evidently. Let's see. Okay, so right now we only get you get one liner coming across. Drop of 1.17. I don't know what the estimate had been out here. Let's see, 14. Yeah, so the bottom line is that they're selling oil down a bit more. So whatever that, we'll have the rest of those numbers as soon as they do come out, and they come out pretty quickly. Tomorrow, so this is the API report. When we come back from the break, I'll get the rest of those numbers for you, meaning the gasoline, the distills. Then tomorrow morning, what we're going to have is that we're going to have the gas numbers will come out at 10:30. The oil numbers will come out at 11 o'clock tomorrow because of the holiday. When you do look at the XLE today actually got to lower price. And just it's going to be a toss-up here, because what we did do is that we rejected lower price out here, and it did have lighter volume. He's still down, but the bottom line is that this thing is not done yet, meaning on the way down. Stay right there, folks. Come right back. We had the Dow Industrials finished up 22, NASDAQ down 96, S&P's up 9.5. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials up 22, NASDAQ down 96, S&P's off 9.5. And if we do go overseas, folks, okay, you're going to see this stuff was percolating in Asia last night. Asia got hit pretty hard. We had Asia down from 0.5% to 2.6 in Hang Seng. Shanghai was down 1.68. And inside our own NDX 100, the largest equity that was pushing downtown inside the index was 100 was JD.com. That was down 10.6%. When you do take a look at these and you line these up, what you're going to see, Shanghai's in tough shape. You know, that baby is trading at 27.04. That was 6,000 in 2008. Bottom line is that it's going after. It's not going after. No, it was with 2007. That would have been the highs. 1 second, let me bring this up. Yeah, so the highs are 2000, yeah, no, 2000. There it is. Okay, so 2000, yeah, 2007, 6,100. And the last high was in June of 2015, which is 5,100. So you can picture, in 3 years, Shanghai got cut in half again. You know, so bottom line is that we're going after these lower swing points. We're only, Shanghai was down 46 bucks last night. We're only $70 away from breaking a major swing, and if we do that, then you're going to be down into this 1800 area. The reason this is so important is that because if we go to the Hang, here we'll go to the Hang Seng for a second, just so I can show you. So you get Shanghai, and of course, when all of these first started, as Americans, we were trading only at the Hang Seng because that's the only place you could actually trade. You couldn't trade inside the Shanghai. Bottom line is that my point is that this is where all the A shares lie, and Shanghai has just gone from 3,200 to 2,700. And what you do have here is that this is off the highs of 33. There's not much holding this up, you know. Really, let me see if I can get. I can get the volumes in Shanghai are phenomenal. Okay, so look at this too. This came off the high with volume. This is pretty intense. You made a high with 15.9 billion. That high was generated the week of February of 2018. You came off that high with 22 billion. This is a problem. And this is telling me that we can go to 24,000. 24,400. That's a long way from where we are, but guess what? We went down 700 bucks last night. Another 3,000 won't kill you. So my point is this. Inside our own markets now, folks, and this is where markets are the same but change. Inside our own markets, we have a lot of shares that trade as ADRs on our exchange versus what we had when you take a look at, and we only go back, you know, 10 years. And that's going to make a difference in the context of how the exchanges move. What we also have is that you have Apple that turned into a $1 trillion company. You had Amazon that turned into a $1 trillion company for 10 minutes yesterday. Now, both of those end up being 8% of the S&P 500. So picture this. You know, we used to talk quite a bit about the aspect of how much Apple, Amazon, Microsoft had to do with the NDX 100 because they were skewed weightings. Apple is still skewed weighting, actually. Most of them are, actually. That being said, what has happened because these companies have got so big is that now you have two companies that are 8% of the S&P 500. So you can see Amazon today was down 44 bucks. Apple wasn't bad. But Apple, you know, Apple's down $1.49. So Apple wasn't putting heavy pressure on inside the S&P 500 today, but yet Amazon definitely was because you get a move, you know, not that that's a monster move either, but bottom line, 45 bucks is 45 bucks. You know, we take a look at yesterday, we're down $56 in, you know, basically about 6 hours. So Amazon's got to be a big one to watch. The reason being is that it looks to me, Amazon, I believe, finished up an ABC structure on the way up too. Let me just put this back. Amazon had one going on a monthly, I believe. Let me see. So there it is. Well, it'll take me too long to figure this out right now on the go, but I believe we're just about finished up an ABC structure on the way up inside Amazon. I want to go over to the gold market for a few more minutes here because I want to look at a couple more that did break down and see where they're at. So we had an Eco-Eagle breakdown. This is trading $32.59. That would have to get back inside 35.05. Royal Gold. Now, Royal Gold was the strongest equity inside the gold market for quite some time right now. And it's actually still right next to its highs. The high in Royal Gold is 94. No, it's 98. 98 was generated July, this July. This is actually, let me put it in closer. Okay, so this is coming right into its strength. Well, even Royal Gold has to get above 78 again. You know, we stayed up here for a couple months. We broke down. You broke with 3.6 million versus 4.2 versus 5.3. So in the aspect of breaking down, it's not bad because you broke down, you have lighter volume. Now the question, if it's going to go higher, it has to get back inside the higher range. What you do want to look at, and this is what's pretty cool, when you break these lower swings in a consolidation, if you break them with dramatically lighter volume, which in fact these gold equities have done, you can continue going to lower price. If you get a rejection of lower price after you do the break, and then you get back inside the range, and you have a sign of strength, once you get back inside the range, that, folks, is laying out your probability of a very major bottom. That's how this works out. Because what you did first, you came down for a long period of time, you broke the consolidation, you broke it with a lot lighter volume, but yet you broke it and you got away from it. Then what ended up happening is that somehow it rejects lower price, it gets a sign of strength, meaning you get buyers in it, wide price spread, accelerated volume, you get action. That's the technical setup. The fundamental setup there, folks, is that once you get the folks that can't handle the heat anymore out of it, I'm not saying that in a bad way, because the bottom line is that you got to put a stop in somewhere. You get out of it. You have strong hands that are in it. You have new hands that are in it, and then they get rewarded. And as they get rewarded, guess what? More buying begets buying. And then, of course, what ends up happening, depending on what type of trader or investor you are at that particular point, some people will jump on it as soon as it's over the 9-period moving average. Some people want to wait for 50. Some people want to wait for the 200. Some people are going to do fundamental work. Some people are going to wait for the fib numbers. You get all those different crowds. That's what stocks get going upside, and that's what gets them going downtown. Dow Industrials finished up 22, NASDAQ down 96, S&P's down 9.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I want to go with one more gold stock because this one here is like, it's hard to comprehend that Gold Corp is this low, number one. It's the $10.17. Now, this is going after, the cool thing here is this, is that it's going after the lows that were established out here in 2016. Now, this is where we had major strength, folks, and this is the last time that the gold market in general performed in a huge way. Gold had come off the lows of 2016, 2015, and then took off like a rocket ship from January till July. So we're coming into that area. Now, we'll find out how it's going to operate this week. The reason being is that this is coming into a big week. The Gold Corp had got to $10.10. The swing point here is 10.14, and the low is 9.46. If that can close inside of the, I'd say, 10.14, that's going to be a good situation, you know, because this is a major gold stock, number one. It's like, you know, what is the problem? You know, you're talking about a gold stock that takes in $3.5 billion, okay? So their problem, evidently, no doubt, is that it's costing them, well, they're still making money, but not a lot of money. And it's evidently costing them more to get gold out of the ground than it should, and that's why the performance inside the market is not there. So Gold Corp is going to be a good one to keep your eye on. What I expect we're going to see overnight out here is that you're going to see lower markets in Asia as well as Europe tomorrow morning. The currency is going to be the number to keep your eye on, because it looks to me that this dollar, you know, there's a small change of trend here. We have an ABC structure down in the dollar. It's failed to hold price the last 3 days again. It seems that if the dollar seems to tick down at all, it seems that we get some selling inside the marketplace, and we haven't seen that at all. You know, bottom line is that last time the dollar was at lows was on April 14th. It's been going up since April. Bottom line, check it out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it, folks. We look forward to speaking right back here tomorrow morning, 8:30. Join Jason. You're going to love the program, folks. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.